Hey, it's Ed here. Today we are taking a look at technical analysis for SP500. I'll cover wave analysis with the Elliott Wave Theory and provide multiple scenarios the price may take and explain why I prefer one count over another. Let's take a look at the different possibilities. Today we're going to be looking at the structures starting from these lows around here of 13th of October and again on 1 hour time frame. Here again we had bullish and bearish options which are fitting to the higher time frame structures. So if you want to be seeing the higher time frame structures, check out the weekend's video or yesterday's video as well, where I went through some of the options as well. So the bullish option was this one that we were following, in which again we were looking to create a contracting leading diagonal with zigzags in mind. At the moment, it is possible that either wave A is here, or we are creating a three-way structure like so to create a double zigzag upwards. If we are creating this as a five-way structure here, the expectation is that this is not done, and indeed this would be the A wave only of this structure here, which would be again A, B and C. And here for the C wave we would be expecting the same five ways. Now the invalidation for this would be around $4,012, at which wave 3 here would be the shortest wave structure in here, which is again not allowed. So that would be the maximum we can see this structure to go to. So but yeah, there's just two options here. Either we do this, or we are taking out these highs, creating this potential wave A, and then looking for that B wave. At that point, the B wave should not reach too much retracement of this A wave, because again, if we want to be respecting this trend line and still have this a bit contracting look, we can't really modify this at all anymore to keep that good look. So the issue with this one is that if we are taking out the highs here, even just a bit, and even if we are pivoting right on the trend line here, we can see one-to-one expectation or extension of this original move here is all the way beyond already this $4,012 area, which is again a major target as it is the one-to-one extension of any ABC. So at that point we would have to just say that the most likely scenario would be that we are creating the structure only to the 0.618. But again, that is something that we don't want to see. But so we keep on monitoring how this is going to go. Again, very possible that A wave is already done here and creating this as a double zigzag over here instead of that ABC. The bear scenario is this one, in which again we would be looking this as an ABC into W, ABC into X, WXY into wave Y here, ABC into A, ABC into B, and now we would be looking for this to be a wave structure coming down as in form of C wave. Now the clear invalidation for this whole thing would be that retracement of this original move for this A wave, for the B wave where we would get beyond the 1.618 retracement of this, again this original A wave, so that would be around 39.82. If we are taking out this high here, then we can't again have B here. We would need to be moving that B here, and most likely this count is not going to be going forward anymore, because again this would remind us more like a five-way move instead. So at that point again we would shift our bias to the other problematic count at the moment, which would be the expanding diagonal. Both of them are still playable at this very moment, as we have not taken out these highs, but again we are very, very close. So we'll see how that turns out. But again, there's definitely some targets down here where we want to be seeing. Again, C should take out the lows of A wave as a minimum for an expanded flat. If that is not going to be happening, then it's going to be a running flat, which is a bit more rare of a pattern. Overall, the expectation is that we would be continuing still higher on this bearish count, as we would be just creating a connector wave structure here. Now if we take out the highs here and invalidate this idea here and invalidate the expanding diagonal, I feel like the other structure that we could be thinking about is this one, in which this again is the connector itself. So instead of creating a bit larger connector, which would fit a bit better here on higher time frame, as with the size in comparison to this first structure, we could be using this as the connector wave, in which we would be connecting whatever this structure is going to be, potentially a five-way structure, three-way back, and another five-way structure to create this bit larger WXY. So those are the options at the moment that I see. Other ones I don't mind. Of course, there are multiple different ways to look at the market, but this is the way I look at it at the moment. But if you made it this far into the video, I would appreciate the likes. Link to my free Discord server in the description below, and for now I thank you for watching and hope you have an amazing rest of your day. See you in the next video. Bye bye.